should we buy or sell this artificial intelligence ETF? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we find it here under specific strategies and we go further down. So it's an AI-powered portfolio selection ETF. 17-ish% from the 52-week low and a minus 8.7% pullback so far. Okay, so this is the big picture weekly data points. Interestingly, I did find these rather nice time cycles. Rise, decline, rise, decline, rise, decline, and then rise. So there is a declining major phase around the corner, which extends all the way here into autumn 2022. And we do see that this declining phase was ferocious, this one as well. This one was a bit more modest. So it begs the question, will the declining phase be like, this one or some of the big ones? Okay. So let's look at some interesting action here with moving averages. So as you can see, test, test, and test, test. So it can work as support. However, this is green 50-week moving average. It also has a history of being rather solid and surgical resistance. So this is a very big deal moving average. Bulls want it to hold, bears want it to break. The dangerous thing here for the bulls is that the bears 1, 2, 3 times have tried to break it. So far it's holding, but this is one of those situations where the bull they have to buy. Here we have the red 200-day moving average, boom, support, resistance, support, test, support. Now the bears are really trying to break it. If it holds, then we would expect the bears to close their positions out of just be on the safe side. And if the bears have to cover, their shorts, then, that increases the buying pressure and that, will help the bulls. But this is a very important situation because if we do see a break here, a clear close below the 200-day moving average here in red, it becoming resistance, then the bulls will start to tighten their stops, and that will, create an inflow of selling pressure, which will help the bears. So this is a really big deal situation here. The MACD shows very clear deterioration. RSI is at a level that has triggered some buying in the past. But the times where this RSI level, which was important back here as well, when it has broken, that is when you have seen these sharp sell-offs, like here and also here. So this is a very, very exciting situation because it can go really, really badly. When we look at the accumulation distribution, we do see some bullish divergence. So there are bulls here really accumulating at these levels. And when we look here at the distance from the 20-day and also the 50-day moving average, it's at a level that has triggered formed lows in the past. When we look here at the seasonality for this ETF, then January closes higher 100% of the time over the last 4 years, but that is strong seasonality, though there is a bit of a paucity of data. When we look here at Finviz, we do have a trend line horizontal support that is beneficial to the bulls, and that is on top of moving average support. 15% year-to-date performance. So what is this ETF? Okay. So it uses artificial intelligence to analyze and identify US stocks believed to have the highest probability of capital appreciation going up over the next 12 months, while exhibiting volatility similar to the overall US market. I would like it to have lower volatility, but okay. The fund selects 30 to 125 constituents and has no restrictions on the market cap of its included securities. The model suggests weights based on capital appreciation potential and correlation to other included companies. Okay, that's interesting. Correlations. Subject to a 10% cap per holding. It is worth noting that while It relies heavily on its quantitative model. The fund is actively managed and follows no index. Okay. Average daily dollar volume is okay, decent. $167 million assets under management. Price book ratio 4.79. Virtually no yield at all. Yeah, look, here are some of the holdings. So Microsoft, Alphabet, Amazon, Citrix, Odex, Walmart, Twitter, Fortinet. Yeah, I mean, a lot of, very well-known companies. Yeah. Here you can see the sector breakdown. So technology is very big. I would expect tech to be less, given that it's like, based on AI. I would also frankly expect more diversity in terms of, where the stocks come from. It is very heavily tilted to America, which from a correlation perspective is a problem. Okay, let's explore further. So here are some correlations. So looking here at, the correlation with the S&P 500 long term is 98%. So this is very, very, very strongly correlated with the market. 16% positive with the 20-year Treasury bond ETF, the TLT, and then 61% positive with gold and 73% negative with the dollar index. Looking short term, 82% with the S&P 500, 65% with TLT, and minus 48% with gold, and 68% with the dollar index. Okay. So if I were to sum up my take here for this ETF, this is really a make or break situation. We have an extremely important moving average in play here, especially this 200-day moving average. It is just a huge deal. It must hold. The thing is that the bears are making progress, though. I mean, they keep hitting it. So there is an elevated probability here in favor of the bears. Now, looking at the components of this ETF and also, the distribution between sectors, it wasn't, particularly hedged as far as I could see. So it's very concentrated. If I were to lean here, then I will be extremely generous and give the bulls the benefit of the doubt and be more bullish than bearish. But that is completely contingent on the red 200-day moving average holding.